Good morning, everybody. This is live trading talk with Patrick MontesDeOca. Welcome. We're looking at the live market here in gold. We have gold trading about unchanged, up 70 cents, and silver is down about 23, 24 cents. I'm seeing a little bit of a reversion here unfolding in digital assets as well. We have activated a short trigger in gold at 1828.80 approximately. Um, the close the close of this bar here, after testing again 3 times the 1832 area, has activated a short trigger. And we recommended this morning to our viewers, to our subscribers, and to our traders here in this live trading room, basically to cover uh, or long positions coming in overnight, and to take a little bit of protection up here. You don't necessarily have to liquidate your position, but you can hedge. You can lock in some profits here if you've been following us here in the gold market from 1721. We have $100 run on this segment here from just a couple of weeks ago. So we're recommending right now to hedge a little bit in the metals, to take some profits off the table, and wait for a reversion to unfold back down, possibly into testing under 1800 again, maybe into that 1750 area, potentially above that 1721. But the market is going to tell us. And what I'm trading here is basically an indicator that is prospective, that it tells us when the price reaches 1832 to take profits if you've been long on this momentum on any positions, depending upon your profile, depending upon how you manage your risk and money management. There are many, many instruments available that provide you with a tremendous opportunity to benefit from the volatility of the market. And so we are short gold, trading for day trading purposes in the futures markets, but we have hedged our core position. And again, there are different derivatives that you can use: futures, spreads, options, stocks, which you can manage the momentum of the market accordingly. And that's what the VCPMI is. It's a prospective instrument that I'm using that tells me when the price reaches 1832, sell one. It actually identifies a little more than just identifying the pivot points. We trade pivot points and use as one of the functions of the market. But it creates a very specific structure that essentially it is a Fibonacci perfect prime number that tells you do not use more than 5 pivot points. And within those 5 pivot points, we can identify the average price. And by identifying the average price, it identifies the extremes above that average price or below that average price. Most traders would consider that resistance or support. This gives us a little more artificial intelligence than one dimension. Let me we have an active market right now, and we seem to be moving aggressively on the downside in the middle. So we're getting a lot of trigger points activated. And, for those that are short, that are following me in my trading room, the first target is 1823. You can trail your stop as the market comes down. Depending upon your entry point and depending upon the multiples that you have. So let's concentrate here on trading this market that we seem to be experiencing a lot of volatility here. We recommended our traders to go flat on Bitcoin or hedge, as we also have activated a daily short trigger from that 68,055. And we have advised, this is the kind of advice that I share with my traders and private subscribers. $69,000 was the high, the recent high in Bitcoin. And if we close below 65,480, then we definitely have a top, a double top in the making. If we close below 66,778, we will activate a weekly short trigger. We have activated a daily from the 68,055 level. We're getting a reversion here in gold. A close below 1823 is going to activate a short trigger. Actually, what we have done here is we have completed the targets in the earlier short. Wow. This is how fast it is. The target has been completed at 1823 that we recommended. So from the 2880 here to 23, that's a trade that's been completed. So the signal is neutral right now. And we will wait for the market to activate the momentum. It has come down to the average price. And the average price basically is a 50-50 standard deviation, so it can go either way. When we complete the target, it goes neutral. And now we want to see the momentum, the price momentum of the market, not necessarily to trade in the futures, day trading, as we completed basically our day trade. You as an individual trader can manage your risk the way that you see fit. What I'm sharing here is basically how I apply the VCPMI for day trading purposes and pull out day trades that, again, here it gave us a $500 profit on the average per contract. So depending upon your multiples, you can produce a real decent day trade profit by using the VCPMI. And this is a very perfect example of that ability to do that, using the VCPMI as your GPS for your trading. It gives you the exact levels, and and we teach you basically how to interpret the probabilities, the logic, the AI behind the algorithm. And so you have to allow for the price to activate the momentum of the market, not the other way around. Price is a consequence of the momentum of the market. And most people use price, as an indicator. And in this case, if the price here, most people probably bought here thinking it was a breakout, as opposed to the algorithm saying take profits at 1823, and if it closes below, revert and go short it automatically activates the target below. Automatically gives you a stop level, and it tells you if you go short, use the level above or a dollar stop or the sell to level above if you are doing multiples. It identifies this area as an area of distribution of supply where you can expect resistance to occur, but beyond that, it tells you exactly when to go short. So the market coming down here, meeting the target and trading above here now is telling us that the bearish momentum has waned. Now it's telling us to prepare that if we close above here on the end of this 15-minute bar, that it would activate a bullish price momentum again, and again igniting the target above of 1832. If on the close, this is the most conservative signal, is to allow for the price to dictate the momentum of the market. Or I should say, based upon the close of the price in the momentum level, it would identify whether it's bullish by closing above or bearish by closing below. But it doesn't mean that it's a perfect science, that, it's going to do exactly the way that the logic recommends. The AI gives you an alternate count, which you can use as your stop. It gives you 3 choices of stops. So I'm describing a little in detail here more because this trade was completed, the short was completed, the target was completed. It's about a $500 profit, and now it's neutral. We went short here for our subscribers at about 644 at 1830.80. Recommended the stop and also the target of 1823 as the day target. And as we see here, the target has been completed. So that's about a $780 profit. So we're looking at a pretty good ratio for day trading and using the VCPMI as we are doing this live presentation. What I'm trying to do here is share with you this incredible tool that you can use as a self-directed individual, and hopefully allow you to succeed in trading these very confusing markets, particularly from a fundamental point of view. And now the resistance that I am going to have, obviously, with some of my commentators is, why am I going short if the market fundamentally is in a very, very bullish position? Well, our core position hasn't changed. We are still very bullish. We are at the beginning of a major acceleration to the upside. But we have seen a $100 move in relatively a few weeks. And that's a pretty amazing move in the gold market. The volatility is changing from conventional wisdom, where these kinds of moves occur, once in a while. But as you can see here, since last year, when we saw the high in gold, we've been in a corrective pattern. And for most people, what they need to see here is basically that we are not in a bear market. We're in a correction within a major bull market that started back last year in March of 2020. And we ran up from a low of the 1450 levels all the way to the 2089 level as of August of 2020. And what you see here on this corrective pattern is the separation of the market fundamentally into a technical pattern to validate the structure underneath the market, to see if it can support this level or much higher levels based on the crisis that developed here back in March last year. And this is the frustrating correction that we ensued from the high after we made 2089 all the way down to a perfect Fibonacci retracement of 61.8%, which was the golden ratio. Retracement that essentially confirmed that this was the completion of the bottom of this correction. This is a second leg in the making. And if we're building a 5-leg pattern here, 61.8% is a normal correction. And we should expect a reversion from there, which we did. And the market rallied all the way up to the 1900s back in May. Now, what this did is basically establish the uptrend channel long term, the completion of the second leg, and we are entering a third leg. This is the beginning of the third leg unfolding. And what we see here is basically the completion of the pattern, the final pattern that established the low. And we saw the secondary low, the third low actually, but second major low was at 1721. And I believe this is the beginning of the next leg up. Within the bigger pattern that you see there, that is extremely bullish. What you see here is that the market has broken out of the trend line, Fibonacci trend line resistance, came right into this major level of support weekly and reverted from here on September 27. So from September 27 to November the 8th, we have rallied over $100, about $112. So what can we expect now upon completion of these patterns is, again, the type of action that you see here. So initially the market showed as resistance at 1832, 1837. The sell one weekly is all the way up to 1841. And from the way it looks like, it's going to have to close above 1832. The close above the average price of 1832 will activate a daily price momentum. And I'm using the gold market as an example, as a technical indicator, directional indicator to all the other instruments, derivatives, aggregates in the metals markets here that I believe are offering an incredible opportunity, particularly the gold mining shares. The miners, I believe, are in a fire sale and continue to add to this tremendous instruments that are incredibly devalued, undervalued, based upon again the anomaly that we're looking at in the price of gold. Once again, everybody, I want to thank you for the opportunity to share this information here. And I wanted to just spend a little time with you here with the gold market to basically show you the logic that can be applied, as I said, to some of the other instruments that are offering incredible opportunity. For the time being, I think we want to see a little bit of a correction here, maybe take out some of the weak buyers that are in the market and come down to identify the next level of support, and continue to add to the long side of the market. Thank you again, my friends. Have a great trading day here, and I'll talk to you next time. You take care. Be well.